So our three messages this week are a discussion around central bank policy over the week, a market update, and an insight into alternative investments, in particular infrastructure. Message one, central bank policy. This week, the US Federal Reserve kept interest rates steady on Wednesday, with a unanimous decision to keep rates on hold, which was a departure from recent meetings. In addition, the UK kept rates on hold too. In a news conference, Fed Chairwoman Janet Yellen said a hike in July is not impossible, but interest rate markets had already apparently ruled out any more move next month. In addition, the Bank of Japan, the Bank of Canada, and the Swiss National Bank all cited the UK-EU referendum as being potentially disruptive to the global economy. Message 2, market update. This week has been a classic risk-off week in markets. We've seen sovereign bonds, such as US Treasuries and UK gilts, up over 1.5%, and the yen-dollar exchange rate has appreciated by over 3%. Conversely, risk assets, including the FTSE 100 equity index, has been down over 5%, and sterling fell against the dollar by over 3%. In the face of this anticipated volatility in markets, we've continued to reduce risk assets within our clients' portfolios. Message 3, alternative investments, particularly infrastructure. Within alternative assets, many clients have exposure to infrastructure. Exposure is gained through companies or funds which invest in projects such as building and running schools and hospitals. Once built, these assets are leased to an NHS trust or an education authority for a period of 15 to 25 years for an inflation-linked rent. This makes their cash flow highly visible. Most of the cash flow is paid out to investors, and this type of investment typically yields 4.5% to 5%, making them very attractive to income-hungry investors.